Greetings traders, Jason here with swinghigh.com for your halftime report. The markets are lower right now, and Yahoo is blaming mixed economic data and earnings for the drop. It's funny how everyone has a different reason the markets are lower, but all that's kind of noise anyway. Some could say that Apple was buy on the rumors, sell on the news. That's one argument that I would sort of agree with. Although, let's take a quick look at Apple here. Although Apple's holding up nicely, so maybe not. But who cares? It's all a bunch of noise anyway. Let's just trade the charts and see what's going on. You look at the 5-minute on the SPY up here in the left upper corner of my screen, and it looks kind of like a dramatic sell-off. Intraday, we're down more than 0.5%, almost 0.75%. But it looks like we might have found a swing low right here, which is comforting, even though it is a lower swing low, which indicates that intraday we are in a downtrend. I'd like to see some higher swing highs from here if we were to finish positive, or even back close to the zero range. We'll see how that unfolds, and I'll talk about that more later today. The VIX is being really weird lately. The VIX has not been corroborating any of these moves this week, or even late last week for that matter. Right now it just ticked to unchanged, and the markets are down over 0.5%. The VIX should be up at least 1.5%, but it's not. So that takes some validity away from the drop we're seeing intraday. The tick has been corroborating kind of nicely. For the most part, we've seen it follow the markets well today, although you could argue that that's mostly neutral of a reading for the tick. The trend at 1 is exactly neutral. It couldn't be more equal in terms of volume flowing in and out of stocks that are on the rise compared to stocks that are declining. So that's neutral. The VIX has not moved at all today, and the tick is rather neutral as well. So the 3 market internals that I like to go by, the indicators here, aren't really corroborating this move lower. The Russells are getting hammered. They're down almost 1.5%, and the financials, the XLF here, are only down 1/3%, which is relatively strong, which supports the bull case because financial stocks are normally leading index, and so is the NASDAQ, but that's a little skewed today. So the NASDAQ being down 0.2% is relatively strong, mainly because of Apple. So don't read too much into the NASDAQ's reading today. Let's look at the SPY here. Even though today is a big sell-off, and don't get me wrong, it is a pretty big sell-off at almost a full percent, we're still holding up in the context of this high base. I hope you can see it with all my lines here. Remember last week we gapped up about on Wednesday, and we gapped up above the 108 area. We're still holding up above 108. In fact, we're still holding up above 109. So if we were to close here, I'd still argue that we are in a bullish formation, because a high base is a bullish formation. Basically, high base is formed because we have a run-up, and then people are indifferent as to where it should go next. And that's consolidation, where everyone kind of agrees on the price for a little while, which is bullish, because after a move up, if everyone's agreeing on the price, they mean that they support that move. So normally high bases break out to the upside. So I would not be surprised if in the near future this high base consolidates and breaks above 110, sending us up towards the 120 mark on SPY. That's it. We just took a run around the markets, and check back this afternoon for my post-market analysis. I hope everyone's had a good trading day so far, and look forward to talking to you later. Thanks for being a part of swinghigh.com.